It is Monday the 12th of August. I'm your host Ryan Keir, and this is the first public episode of the Quantium cast. Without wasting any time before I have a look at the news flow today, the time is 6:50 right now, and I'm having a look at the company's reporting, and all I can find right now is Valuera Energy, ticker symbol VLU. And for any of you traders out there, futures look fairly stable. I mean, the only thing that stands out at the moment is Brent oil and WTI crude oil futures are down about the same amount, 27 cents, so 0.5%. Nothing too shabby, but following the price action later on in the day, but also awaiting Tuesday's API announcement and Wednesday's EIA announcements for inventories would be important. But nevertheless, let's get into today's focus stocks, beginning with Burford. And holy crap, they've just released an RNS saying there is evidence of market manipulation in Burford shares. We've also got our eyes on Shanta Gold Limited, the East Africa focused gold producer, developer and explorer, as they announced their interim results for the 6 months ended the 30th of June. And as mentioned earlier, we're also having a look at Valuera Energy Inc. as they released their Q2 earnings and also report positive production results. And it looks like we'll be putting the spotlight on Feedback PLC. This is a specialist medical imaging company, and they've just raised £2 million at a 14.3% discount. And finally, Powerhouse Energy Group. The ticker symbol for this one is PHE, or more specifically LSE:PHE. They have just announced a contract collaboration with Peel Environmental for 11 DMG sites. And a quick side note before we begin, Powerhouse Energy Group have a bit of technology, and it's called the PHE DMG technology. So they have agreed with Peel Environmental for 11 DMG sites. I think I need to grab quite a few super malts to get through this. Burford shares have potentially been manipulated, and Burford say that this could be a result of Muddy Waters' actions. And they mention something called spoofing, which is the placement of high volume trading orders at a price equal or better than the best bid offer price. Basically, this means that if one individual had holdings in a stock or entity had holdings in a stock, if they put a sell order better than the best bid offer or a buy better than the best ask offer, they will likely move the price in their desired direction. And in fact, the company has come up with a lot of timestamps, price declines, number of sell orders created, number of sell orders cancelled, sell orders executed, and they're trying to say that this could potentially suggest manipulation in the shares. They haven't specifically said Muddy Waters are responsible, but they did say that this had happened following the Muddy Waters report and also around that period. So it's really interesting to look at. This could be bullish for the share price at the moment. Although you've had reports, once again, Muddy Waters report, people could be digesting issues in there, underlying issues that could be worrying. And also the recent dossier from Gotham, which is not as brutal to say the least. Burford have also mentioned that the day the RNS release had come out, in fact the day before that, Muddy Waters had closed their position, or 20% of their position, and then the day of the dossier release they had closed it by a further 63%. And basically they're trying to say that Burford was supposedly insolvent, as Muddy Waters put it, but why were they buying the shares at Burford? Nevertheless, this is a stock that should be followed closely. Traders who believe that Muddy Waters are in the wrong, or investors, would obviously be buying. Individuals that think Muddy Waters' report may have had some substance to it could look too short on any retests of resistance at say £10 or so. Moving on to Shanta Gold, this company has reported revenue growth in comparison to half 1 2018. Their revenue's up from $49.3 million to $53.6. That's quite impressive for a small company of this nature, but they have doubled in the past year on the back of gold prices making all-time highs in pound terms. The company's also reduced their net debt from $31.5 million for the full year 2018 to $26.9 million. One thing to note is that they'll likely benefit from exchange rates, as you'll need less dollars for a pound in comparison to the year before. We had about 130 as an average, right now it's 120. We're talking about cable here. Otherwise known as the GBP USD currency pair, the pound to the dollar. I like the fact that the company's cash costs haven't really changed. In fact, they've decreased by about 3.5–4% to $530 an ounce. But on an aggregated basis, we use something called all-in sustaining costs, and that puts their break-even at $730 an ounce, which is below their annual guidance of $740 to $780 an ounce, which is really impressive. In fact, this company is trading at a market cap of around 70 to 80 million pounds, and in comparison to companies of a similar nature, it's fairly valued. In fact, all-time quarterly record has been set for the tons milled during the period. I'm not really finding anything bad in this RNS, in fact. Although with higher gold prices, yes, their cash costs per ton haven't increased, they've decreased in fact, but the nominal cost of sales figure is up 37.5%, and that is more so due to lower average head grade and lower recoveries from production. So the production front was a little bit weak, to say the least. But after looking at all this positive news, the company reports a loss before tax of $4.1 million, which isn't impressive at all. And they've mentioned that they've had a lot of non-cash charges to the income statement. One would have to read further into them, but they have been reducing debt, which is quite interesting. And they've reduced debt by following their net finance costs of around $2.5 million. It looks like the company said they've made a couple of investments, and excluding this half, the company would have normally been on a price to earnings ratio of about 10. Moving on to Valuera, as they announced their second quarter 2019 results, I can see that they have an average production for the period of 700 barrels of oil per day, down, or at least barrels of oil equivalent per day, as they're a natural gas producer. This is down 5% from quarter 2 2018, but down 9% from quarter 1 2019. That's not that impressive, but they do have an operating income of $1.8 million. They've mentioned 20% higher than quarter 2 2018, but the previous quarter, quarter 1 2019, they're down 21% in terms of operating income. It seems that it hasn't been the greatest quarter. Natural gas prices have been suffering, oil prices have been declining, and in fact they've mentioned that the average realised gas price has dropped by about 7% in comparison to quarter 1 2019, which is the previous quarter, but it is 15% higher than quarter 2 2018, suggesting that their margins were better back in quarter 2 2018. And yes, before you mention, the company did mention operating income, but actually they have a net loss of $2.1 million. So that's not that positive. The cash balance has depreciated in the 6 months ended, the 3 months ended June 30th, 2019 to about $50 million. And it was previously in the range of 55 to 60 million, depending on which period we're using. We could use the 6 month ended June 30th, 2018. So that was about a year and 2 months back. They mentioned their cash was $55 million, so there has been a lot of depreciation on that front. The company right now is focused on appraisal steps for the ongoing stimulation and testing campaign for one of their work programs. And they've mentioned that they're trying to look at reservoir stimulation, in fact multi-stage reservoir stimulation, which really speaks for itself, to try and target higher flow rates. So the company is hoping on value added from exploration. Right now they do mention that they have an excess of $40 million of positive working capital to push them along, but we must note that that is dripping away as we speak. And now for Feedback PLC, This company has mentioned a placing of £2 million. They've also mentioned a proposed grant of options, so more additional dilution in the future. The company had a market cap of around £5 million before we include any of this dilution. And the placing price is approximately a 14% discount to the 1.4 pence closing mid-market price on the 9th of August, which was Friday. There's an interesting bit here. The board believes that it is very important to incentivize key members of the management team. So they've mentioned in conjunction with this fundraise, the board will grant Tom Oakley, the CEO of Feedback, options of approximately 2.5% of shares. Whoa, but what's that? £100,000? Or in this case, £40,000 odd for his quote-unquote efforts. The company hasn't really mentioned much about the fundraising. It seems that it's just ongoing and funding activities in the future. They mentioned Bleeper, and they say it's set to transform the outlook for the company and could change the way that medical images are communicated in everyday clinical practice on mobile devices and laptops. In other words, world-class assets. Everybody loves that term. I think I should probably go for a sip of the super malt. We are going to finish with Powerhouse Energy Group. This company basically want to make hydrogen from waste plastic. They've been working towards this for a while. The company has had numerous placings and fundraisings. They've also had a switch of CEO. I believe the CEO was either a Canadian or an American chap, and now their CEO is David Ryan, I believe. I mean, we're instantly with him because he's called Ryan, right? Or at least his surname's called Ryan. But getting back to the point, this deal is for 10 further sites. In fact, 11 DMG sites, but a minimum of 10 further sites in the UK. And these DMG facilities are just testing their technology that they have. These kind of companies are, what should I say, drip feeding investments. So as the past has shown, if you are bullish in this kind of company, you have to wait for near revenue phases. The only way you could probably make a lot of money in this kind of investment is a huge deal. This isn't really a huge deal, but it's still impressive. It shows that the company is making some kind of progress. But obviously, if you look at the share price and the chart and the losses on the accounts, they're not really the same. But I mean, these kind of companies do get funding from the government. They may have access to grants. So placings in the future may not be the only option for them. Obviously, if you ever see the company mention that they are having dilutive financing in the way of a convertible loan note, which is basically shares being issued at the average price each day and then being sold on, so the price is almost certain to drop. In the past, we've seen it with Prem Afren. The ticker symbol was PREM, and that company was diluted to the brim. And after the CLN situation had finished, the price had soared. That's of no relation to this company right now, but I'm just talking about CLNs in general. This company is trying to go the green route, which is an increasingly popular area. In fact, they're trying to go on a journey to zero carbon. They're saying that hydrogen is increasingly seen as useful in the UK. It would be cool to follow up, but I mean, there aren't really any numbers mentioned for this company. It would be cool to check on their cash balances though, to see if they are in need of a fundraising in the future. If they aren't, then it is possible that one would look to this kind of investment if you're trying to diversify your portfolio. But once again, it is an AIM minnow, and I believe they haven't got any revenue. This RNS is really subjective anyways, but there is an underlying agreement. So that wraps up today's first public episode of the Quantium cast. But if you want insight into the technical side, then keep your eyes peeled for any additional content posted later on in the day. In fact, we're gonna upload an additional chart pack later on today, so keep your eyes peeled, and that will be including analysis of charts of companies discussed in this podcast. But first, head on over to our site, quantiumresearch.co.uk. Yes, that is quantiumresearch.co.uk, and download the relevant chart pack for this episode, episode 8. I've been your host, Ryan Keir. Until next time.